Edward is a Mix AA franchisee. According to the franchise policy of Mix AA, franchisees must be the director of the SSM company and operate independently. Edward only need to pay fees to rent the Mix AA brand and purchase raw materials and machines from Mix AA. One day, Edward's staff informed Edward that some raw materials were out of stock and needed to be ordered, including lemons, large cups, straws and milk depowder. So Edward placed an order with Mix AA company. Then the PO is sent to Mix AA HQ. Mix AA checks whether the required materials or products are available based on existing inventory, future inventory, production plans. Fortunately, Mix AA has enough inventory this time. Then the HQ send the outbound delivery order to the central factory. Warehouse staff will pick the required materials or products in the warehouse according to the order information. After picking, the goods are packaged together and ready to be delivered. After the materials are packaged and prepared, Mix AA will carry out the shipping operation. The goods will be shipped to the West Malaysia port and automatically reduce the inventory quantity. While arrive West Malaysia port, packaged will deliver to the destination by land transportation. After delivery is completed, Mix AA will issue an invoice or bill to Edward based on the delivery quantity and contract price. After receiving the invoice, Edward checks whether the quantity of goods is consistent with the invoice and makes the payment within the agreed payment period after confirming that it is correct. But not every time Edward is so lucky. Sometimes, Mix AA doesn't have enough inventory. When there is no or insufficient stock available for delivery, production is carried out. ERP system automatically generates production proposal based on the purchase order and current inventory. The ERP system also can generate production proposals based on an analysis of seasonal fluctuations using historical data. This can optimize production processes, reduce costs, and improve supply chain efficiency. Based on the demand and delivery cycle outlined in the production proposal, along with the company's existing process capabilities, equipment and personnel, the ERP system evaluates whether the scheduled output can be achieved on time. If the production capacity is insufficient, we'll make resources adjustment, such as adding shifts, introducing new equipment or manpower, to increase production capability. Else we'll reduce or adjust the production plan. Then the ERP system based on the confirmed executable production plan. Make more detailed schedules. Then system issued the production orders to the workshop for actual production. In this stage the order status changes from planning to execution. Then the workshop will receive the shop floor documents. This document includes various documents used for workshop execution and management. Include production orders, process routes, work instructions, quality checklists. This helps to instruct the worker on how to perform production operations. Then the workshop will collect the raw materials and semi-finished products required for production. From the warehouse to the workshop based on the materials list generated by the system based on BOM. When all materials and semi-finished products needed are ready, the workshop starts producing the finished or semi-finished products that are listed in the production plan. All product produced must meet the quality checklists and other requirements listed in the shop floor documents. After production is complete, the system generates the production report, which includes actual production quantity, working hours, material consumption, etc. This production report will be stored in the company's database and used to optimize production plans. And the progress of the production order will be updated. Then the product or semi-finished products have been transferred to the warehouse. Product will be transferred to product warehouse. And the semi-finished products will be transferred to the semi-finished products warehouse. This categorization is intended to streamline management. In this stage the ERP system will increase the inventory for selling or use for further processing. After the product has been transferred to the warehouse, it means that the production planning cycle came to the end. At the last the ERP system will perform cost accounting such as labor cost, materials fee, equipment depreciation and financial settlement for the entire production order, and generate cost analysis report. The report will compare and analyze the planned cost, target cost and actual cost. Statistical methods will also be used for analysis, such as calculating and analyzing variance. The report which will be archived for subsequent process improvements. Each department of the company can initiate procurement, but here we take the central factory as an example. This day Mix AA received an order from Edward. But unfortunately, the raw material for producing plastic cups, polyethylene terephthalate, PET, commonly known as number 1 plastic, was below the safety threshold. Therefore the MRP system built into the central factory's ERP will automatically submit a purchase requisition to the purchasing department. Therefore the MRP system built into the central factory's ERP will automatically submit a purchase requisition to the purchasing department. Additionally, the ERP system's built-in MRP, Material Requirements Planning, module will also break down material requirements based on the production schedule and bill of materials, BOM, and submit a purchase requisition to the purchasing department. BOM is a list, which lists out all the parts, raw materials, components and quantities required to produce each product. In addition, some products are not produced by Mix A. These products will automatically trigger purchase requests based on sales orders, such as lemons in Edward sales orders. The purchase request includes the materials to be purchased, quantities, expected delivery dates, budget, and other details. Then the procurement department evaluates and selects appropriate suppliers based on the requirements of the procurement application. They will first check whether they can produce the material themselves. If cannot production by themselves, then they will look for outline agreement they have make. If there are no outline agreement is available, then will select the suppliers from the source list for purchase. Source list is a list of approved or potential suppliers. Usually, use the three methods can find the suitable suppliers for purchasing. But sometimes the above three methods cannot meet the needs. The purchasing department will request for quotation, RFQ, to potential suppliers to collect information, such as price and delivery time, and then evaluate and determine the source of supply. The purchasing department will select suppliers based on the supplier's quotation, delivery cycle, quality level, past cooperation experience, etc. If before having sent request for quote, RFQ, to potential suppliers before, a rejection letter will be sent to the unselected suppliers at this stage. Once a purchase order is generated, the supplier will be notified via email, ERP system, ED, electronic data interchange, or other means, and the supplier will confirm the order. This is to ensure that suppliers are informed of the order content in a timely manner. After selecting a supplier, the purchasing department will issue a formal purchase order, PO, to the supplier, which lists out the specifications, quantity, price, delivery time and other terms of the required materials. When the purchased materials are ready, the supplier will pack and transport the purchased materials or goods, according to the order requirements and send them to the designated location of the enterprise. After receiving the goods delivered by the supplier, Mix A will inspect and accept the goods according to the PO, and randomly select the goods and send them to the laboratory for quality inspection. If the quality of the goods received meets the quality standards and the quantity is consistent with that in the PO, the receipt operation will be completed in the system. If the quality of the received goods does not meet the required standards or the quantity does not match what is stated in the PO, the goods will be rejected. After delivery, the supplier issued an invoice to Mix A. Mix A's finance department will check whether the invoice amount and quantity are consistent with the order and receipt information. If there is any inconsistency, the ERP system will automatically mark the invoice as abnormal and block the invoice and suspend payment. The purchasing and finance departments will cooperate and conduct investigation. Once the discrepancies are resolved and the system records are consistent, the finance department will unblock the invoice and the invoice can enter the normal payment process. After verification, the finance department pays the supplier according to the payment terms, such as cash on delivery, monthly settlement, quarterly settlement, etc. Depending on the mode selected, staff can choose manual payment, which requires staff to manually enter payment details in the system. They select the outstanding invoices to be paid, specify the payment method, bank account and amount. Once posted, the system generates a financial file to clear the supplier's outstanding items. If select automatic payment, the ERP system checks the due date, payment terms, cash discount and payment method, and then proposes a list of invoices to be paid. After review, the system can automatically create payment documents, generate checks or electronic transfer files and record accounting entries.